for most people, and even the conventional financial advisors will tell you this, having all your assets in stock when you're getting close to retirement is could be a very well, a not so good thing would be the best way I'd put it. Just because the stock market is subject to a lot of volatility, I know it's behaved very well in the last couple of years, but traditionally there's a lot of volatility to the stock market, so you need to plan for this.
2022,
Yes.
I lost 24% of my IRA money or
Wow.
401k money. It was just gone.
Yes.
Now, it has come back. But
Sure.
if that had hit me at the wrong period of time, that would have been devastating.
Hello. So today I have got a very interesting guest for the podcast. The guest I've got is a good friend of mine, and one I'd say that tolerates um, all my long conversations on finances and financial planning and setting up your life. I've known him for a very, very long time. We worked together for several years. We're now working for different companies, but it's a huge pleasure of mine to introduce my good friend, John Angus.
Hi there.
Hi,
Thank you for
John.
that
So,
nice
John, I am
introduction.
so excited to have you on this podcast. As I said in the intro, you tolerate my constant rambling on all things financial. So, I really appreciate that. But I wanted to ask you a couple of questions because I think it would benefit our guests quite a bit. Because from what I know from you, John, you are a phenomenal student, a great listener. And so I think this is going to be very interesting. So, again, for the benefits of our guests, can you talk about where you grew up, what you studied in college, and where you live right now?
Yeah, so I grew up in Flint, Michigan, which I know is famous for the water issues, but how much that impacted me, I guess everybody else will be able to say because I think I'm okay. Um, but I went to college first 2 years to be a youth pastor, but then
Wow.
I decided that probably wasn't the right path for me, so I transitioned to a different university at Cedarville University in Central Ohio, and I graduated with a mathematics degree and secondary in education. So I've been I taught school for a year,
Huh?
and then I got laid off, and then I
Wow.
got picked up by the automotive industry, and I did that for many, many years. Took a brief break from automotive, went into retail, and then about 3.5 years later, I went back into automotive, and I've been there ever since.
Fantastic. And where do you live right now?
I live in Spring Hill, Tennessee. It's just south of Nashville, um, not too far from Wanji.
Yes, I
Yes,
think you're 10 minutes away now, right? Is that correct?
yeah, which has been nice.
Yeah. Family. Can you tell us a little bit about family?
Yeah, I'm married to my wife Lynn. She and I've been married for 28 years as of about 2 weeks ago, and I have two children. My daughter Mackenzie is 26. My son Brennan is 24, and they're on their own at this point. Except Mackenzie is living back home with us now, at least temporarily. Brennan is down working in the, I guess, the government world of defenses down there in
Exactly.
Huntsville.
Yes,
So
in Huntsville, which is not too far. I think Huntsville is a pretty big defense city, defense and aerospace, I believe.
that's correct. And that's
Yeah,
where, NASA had a big presence forever and ever. And yeah.
exactly. And I think that's about what is it, an hour and a half from where you are or 2 hours?
Yeah, his house is about an hour and a half. And I've made it a lot of times because he just purchased the house, so, back in June. So
Great,
I'm proud of him for getting that going as one of his investment moves.
great. Good. So John, let's chat a little bit here about income, finances, retirement, etc. I know one of your goals, which is most people's goals, is trying to make sure you are financially ready for whenever you retire. You decide you're going to retire in the future. So I'll ask a couple questions about what type of financial assets do you have? I'll start off with that, and then I'm going to ask some questions about those assets. So, what type of financial assets do you have that you plan to use when you retire?
Yeah. So my journey has involved moving companies a couple of times. So I have some uh, previous, not 401k money, but it's retirement funds
Sure.
that I was able to buy out and
Good.
take with me. And I converted those into different things that would provide me with a similar type of pay structure in retirement.
Sure.
So it's not a pension, but it's gonna act like a pension
So, is
for.
that like an annuity?
That's correct. We got variable annuities
Good.
from my wife and myself. We did the same thing. So, and it wasn't a large amount of money, but I looked at it and said I wanted it to behave in a manner that's similar to what it would have been had it been a pension for us.
Great.
So,
Great. So, you were
um,
thinking again more in terms of a steady income stream.
yeah. So at this point in my life, cash flow is pretty much my focus.
Very smart, by the way.
Yeah, yeah, because I am one of those guys that's getting more and more gray hair fast. So
I don't have that.
so yeah, so cash flow is important.
Yes.
Um, but I will take the growth right now because I'm still working,
Yeah.
at least at this point. So I'm able to take the growth that I can get because I'm not needing the cash flow to live on right now. So we're keeping that in place. I'll take the growth anytime, but the cash flow is my focus.
Great.
So
Okay. So,
I'm sorry. Along with those companies, of course, once I got into them, pretty much all I knew until I started talking to Wanji, what, 4 years ago, 4 years ago about this stuff. Pretty much all I did was 401k. I didn't know any better. It was just, it's what everybody did. I am thankful to God that at least He gave me the wherewithal to say, okay, I need to be and putting as much as I possibly can into those vehicles in order to get ready for retirement. But then after I met you, I started talking, and that led to other things that I'm happy about.
so let's talk about some of those other assets. How would you classify them, or what would you call them?
So the other assets I would have would be they're variable, right? I've got
Yes.
some syndications, I've got
Yes.
some bridge loans, I've got some crowdfunding, I've got some
Yes.
gas and oil, I've got some other things, all different things. I counted them up the other day. I got about 28 different types of income streams that are
Great.
within those buckets,
Yes.
right? But and I'm sure we'll get into this later, but not having all my eggs in one basket is a lesson that I learned in 2022. So
Yes. Yes. Fantastic. And again, the audience may not know this, but John, I think you do a very good job of tracking your assets and following them. I'll say you even do a better job than me. I think I'm more the type of person, if I'm not careful, I just buy the asset and then maybe once a year I look at it. I think you go in monthly and look at your assets. So I would say you're very, very diligent with that, which
yeah,
is
you
great.
can call me OCD if you like.
I wasn't going to go there.
Yeah,
I
yeah.
was not going to go there, but that's good. Now, let's talk about you. You have these assets. Can you talk about maybe why you got into them, and maybe, yeah, maybe what you were hoping to get from them on a go forward basis?
Yeah. So I alluded to the fact that prior to meeting you and starting these conversations, um, everything I did was in stocks, right?
Sure.
Through 401ks at work.
Sure.
So, and honestly, how do I say this and not be too mean to myself? Uh, dumb as the box of rocks. I was just doing what everybody told me I should do. Just
wouldn't say you were dumb. I just say probably that was the limit to your knowledge. So
Yeah.
you were doing the best you knew to do.
Yeah, but
Continue.
I wouldn't have been able to tell you how or what I should have expected as a result of what I was doing unless it popped up on the Fidelity screen, which is
Sure.
what we used back then.
Yeah.
Uh, so, but what happened in meeting with you, I started to realize how susceptible I was to market conditions in different situations should they happen.
Yes.
And I was full of anxiety about that. But then the things that we were talking about were so different and unusual. You didn't hear people talking about them. And I was full of anxiety about those too. And I think one of the most important things that I've had to embrace is the fact that not to be reckless, but to understand I do as much due diligence as I can
Exactly.
on some of these alternative investment type things.
Yes.
If they go bad, then that's something to learn from. But if everything goes bad, if the whole market goes bad, if the economy goes bad or whatever, it's better to have things spread out
Exactly.
and give you an opportunity to have at least some areas that can do better or survive,
Sure.
maybe.
Sure.
But if it goes that bad, it just doesn't going to matter anyway. So you some of the risk that you think, oh man, I'm not sure I'm ready to take that risk.
Yes.
Well, I was talking to my daughter the other day, and I said to her,
Yes.
"You got to start looking at things in terms of what's the worst thing that could happen, and decide if you can manage the worst thing that could happen."
Very good point, John. And I'd mention here because I know John and I talk a lot, so we we cover these topics quite a bit. And it's not that 401ks are bad. 401ks are actually pretty good vehicles.
Yeah.
But for most people, and even the conventional financial advisors will tell you this, having all your assets in stock when you're getting close to retirement is could be a very well, a not so good thing would be the best way I'd put it. Just because the stock market is subject to a lot of volatility, I know it's behaved very well in the last couple of years, but traditionally there's a lot of volatility to the stock market. So you need to plan for this. And in addition to that, obviously, one of the things we look at is just income, right? Because what everybody needs to manage is making sure you've got enough income to support your lifestyle, going forward.
Yeah.
So again, the stock market could continue going up, but in order to get an income from that, you've got to sell the assets and then get cash. And if the market is dropping rapidly, which it does from time to time, it can create a very nervous and uncertain feeling, and it could really throw your finances off. So you just really need to think about that as you retire, and that's one of the things certainly I help people do. Think through what amount of income do you need? What type of stability do you need in your retirement income? And then we look at various assets, which again, you'll take back to your financial planner. I'm not a certified financial planner. I make that very clear. You take that back to your financial planner, and then you develop a plan that works very well for what you want and what you and your family need going forward. Great. So,
Yep.
John,
So,
I
can I say
also,
one thing to that?
please.
I think one of the hardest things that my wife and I have had to deal with is to determine how much is enough in retirement.
Okay, so tell us how you guys process that, because that's a very good that's a very common theme
Yeah.
most people have to work through.
Yeah. And honestly, I would tell you I'm still not 100% certain. So effectively what we've decided to do is we've tried to say, look, where are we living at now
Yes.
with all of our expenses?
Yes.
Would we expect any of those to drop off or increase or whatever? And then we've picked a value to
Yes.
say, here, we're going to work to this value.
Great.
And once you pick that value, there's a piece that comes with that, because whether you're right or wrong, at least you have an objective,
Great.
right? And you start working towards that.
Great. Great.
Yeah. So we may change it, but the other thing I've talked to a lot of people who've been retired, some for a few years, some for longer. And the fact of the matter is the older you get, the less you spend.
That's correct.
You just they talk about 4%.
Yes.
That's fine. It might be a good average over
Sure.
the years, but at the front end, you're probably going to spend more than that in a month
Sure.
or a year, sorry. And then towards the end, you'll spend a lot less than that.
That's true. And John, I know you mentioned, your family earlier on. At your stage in life, you're past the I need to get kids through college and things
Yeah.
like that. So for me, a lot of the really big spending people have in front of them, for both you and Lynn, that's kind of now behind you, right? And it's not like in the future you guys are gonna buy a big 10-bedroom house. Like none of that's in your future. All of that stuff is now behind you.
Going the other direction.
You're going the other direction.
Yeah. Well, and honestly, I don't know what kind of tools may be out there, but I've talked to several people who have acquired through either purchasing or talking
Yes.
to other people, um, planning tools where they kind of do the year by year by year by year. Uh, Here's what I'm bringing in. Here's what I'm spending,
Spending.
and it just kind of helps show. And you can adjust your
Yes.
rates of inflation. You can adjust the interest rates that you're expecting, things like that, and it allows you a lot of flexibility to do a strength test, if you will, of your
Yes.
plan, right? So you test it out, and you can test it under whatever variables you want. So I don't know if what's out there for that. I've been using the same thing now for a few years, and I'm fairly comfortable with it. So, but just to say, there are those things out there that you can.
There are lots of tools out there. I don't know, which one do you use?
My other financial planner guy.
Great. Yes. So that's true. So again, yes, and I've done that as well. So you could get it from a financial planner. I believe the major brokerage houses as well, right? All of them have retirement planning tools that you can use. So I know, and then obviously if you search on the internet, there are a gazillion of those things out there.
Yeah.
So certainly there's quite a bit that you can use. John, so let's talk maybe in terms of what you've learned maybe over the last 3, 4 years. Talk about maybe one or two assets that you found and maybe ones that you like, or maybe ones that you ran into when you were like, maybe I don't think I want to use this. Can you talk about that a little bit?
Yeah, so I think this speaks directly to that fear component I was talking about earlier.
Yes.
Right? I can remember the first investment I made was into Urban Gate,
Yes.
which is absolutely my favorite. No
Great.
question about it.
Great.
That's local here in Nashville area,
Yeah.
and but I remember sending that first check and feeling just nauseous. I was
Yes.
so uptight about it. But I had to keep going back to what I said earlier, and that is you got to diversify this. You've got to be willing to take the risk to do these things. But being willing to take the risk in the right places,
Yes.
it's kind of like you've got to be willing to be able to say, if I don't have this,
Yes.
I'm going to be okay. And there's accreditation out there, which is going
Yes.
to be required for a lot of investments, but not all. There's
Yes.
a lot of investments that will pay reasonable rates, but not as good as necessarily accredited investors can get access to. And that's simply because they're trying to make sure that people don't put themselves in a position where if they were to lose all of that investment, that it would just destroy them.
Yes. And that's a government regulation, which I think is a reasonable and good.
Exactly. So the Urban Gate is my favorite for sure. I would tell you Sugo Capital, they have a heart for teaching
Yes.
people,
Yeah.
and they do a wonderful job of that. They also have products. Most of them I've done well with as well. But I've got a few that went just flat belly up too. And that's there's some things that I've learned out of that,
Sure.
that I don't know if you want me to go into those now or later, but
No, you could talk about that. So what type of investment were they, and then what did you learn?
yeah. So the first one it was a promissory note, right? Uh, I don't know. Should I name the names here or?
We can skip that.
Okay. Um, so the thing about it is, when I did it, it seemed very reasonable,
Sure.
right? It was an investment. It was a promissory note, so it wasn't a syndication or anything like that. But it was something where you put money in, and they were helping lots of very significantly sized retail organizations.
Yeah.
And at the time, it was good because it was 2022, 2023.
Yeah.
It was still very much a thing. So online presence was huge and very
Huge. Yes,
successful.
that's correct.
And then all of a sudden, I shouldn't say all of a sudden, then it all of a sudden wasn't such a
Exactly.
big deal anymore, right? And that fund, uh, unbeknownst to me, started having problems, and the uh, the uh, owner
Founder,
operator,
principal, yeah, owner
the
operator.
principal, is now been indicted for running a Ponzi scheme.
Exactly.
So those things happen. So you do your best to look into things as much as possible and do your due diligence. But the other thing you got to recognize is you can't control the weather.
Exactly.
It's going to happen in some situations, and you've got to be willing to accept that risk.
Good. And
Now,
I think, John, one of the things you and I, because again, John is part of a group that I meet with once a month, just looking at investments because we've determined in order to make a smart investment, you want to get other people to look at it and kind of weigh in on it. So there's a third guy we meet with who's not on this podcast today. But I think one of the things we've learned as we've gone along is, first of all, to limit the size of your bets, for lack of a better term. I shouldn't call it bet because it sounds like it's gambling, but maybe to limit the size of your investment because you want to manage the risk, right? So I think that's one of the things we've done. I think the other thing we've done is just look for a long history because, again, the longer the history, uh, generally provides some type of indication in terms of how stable it could be. Although the government, certainly for financial planning, always, I think it's wise for government purposes to put the disclaimer that past performance, right, doesn't guarantee future results. But certainly, I think history is another thing that you want to look at. I would say the other thing we've looked at is this issue of control and lockup periods, because sometimes, like in this promissory note, which I'm very familiar with, the money was going to be locked up for several years before you get access to it. So to me, I think investments that operate like this tend to be riskier. Investments that have more liquidity tend to be better because obviously you could pull your money back, pull your money out if you fail to. But if
yeah,
you sign a paper that says, hey, I'm agreeing to lock up this money for 5 years, 3 years, 7 years, whatever that case may be, then that could be highly problematic. So, John, I don't know if I caught you off there. Were you finished talking? Again, this is 1G rambling, right?
yeah. No, no. So you almost touched on a couple of other things that were significant in there, and that is, the first one being, we have learned that
Yes.
an investment for us, this is a personal thing, but we've talked about it a lot. I'm not going to go over 2% of my net worth with any
Great.
investment, right?
Great. Great.
And I have done that in the past before I set that rule, and it's worked out in some cases, and it's burned me in a couple other cases, right? So, and the other part that is important is when it's available, making sure that the investment that you're making is backed by tangible assets,
Great. Good point.
like property or whatever, right? So, and the other thing you have to realize is there is a stack, if they call it a stack, where there's different levels of ownership, senior ownership, private equity, da 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 da. And if things were to go bad, where you're at in that stack determines the pecking order of who gets paid back anything.
First. Yes, got
Yeah,
it.
first, second, and third.
Yeah,
So,
exactly.
so those things are super important to recognize. The lockup period is important. Also recognize the fact that the longer the lockup period is, the better your opportunity will be. I know your earnings opportunity will be. That's part of usually the give and take with these whole things. But then also recognize that when you're doing those things, you have to know there are some things that will pay you back throughout, and that's it. And there's other things that will pay you back, and then at the end, pay you your initial back as well. So you've got to be aware of what will happen at the end
Yes.
of the
Great.
investment, because not all investments will
Exactly.
give you back at the end. They'll start giving it back to you throughout. So there's pluses and minuses to both scenarios.
Great. Great. Yeah, and that's certainly something we can help people think through, right? If they're thinking of investments, we can help them think through total risk, how much of your total asset base do you want to put in this investment? How does it pay back? Help them identify risk in terms of lockup periods, whether or not it's backed by real assets. So if something were to happen, the chances of being paid back are high, knowing where they are in the payment stack, as you call it. That's a very, very important point, John, that you brought up that I didn't think about. One of the comments I want to make, again, for the benefit of listeners, is I know you talked about Urban Gate. So just for the benefit of the listeners, that firm is part of a class of investments that fall under what's called private credit. It's huge now in the US, and I'd say it's all the rage. There's a lot of, and many, but not all, like private credit firms, one of the things they do is essentially they behave like private banks. So in the case of this particular one, what it does is it loans money to people who flip houses. And why this is a huge business is because regular banks will not loan money to people who flip houses. I'm not sure if it's because there's a government regulation coming out of the 2008 recession that limits this type of activity for regular banks, or regular banks just think it's risky, or whatever the case may be. But regular banks will not engage in this type of activity. So people who buy maybe dilapidated houses or houses that need fixing up, invest money fixing up the houses and then sell them within like a 6 to 9 month period. They can't go to a regular bank to get money. So firms like this one, they fill in that gap. It's a huge gap, as you can imagine, all over the US. And in this case, both of us invested in this firm called Orbangate. And one of the good things it did when we initially went in, they were paying a return of 8% cash. And voluntarily, they've raised that to 10% cash. So this has been beautiful. So you're getting stock market like returns, because the long term average return of the the US stock market is 10 or just over 10%. But obviously, it's very volatile, as we mentioned. But in this case, you're getting that type of return and you're getting it in cash. So that's been really, 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 really good. But certainly, private credit is an option out there for stable cash returns that people will think of in retirement. I will not say it is risk free, but again, if you go into these things looking at history, doing your percent allocation in terms of your total assets, how much are you going to put in, maybe spreading it out, and then various other assets, you certainly could um,
Yeah.
get a good income from it. In my book, right? For my view.
Yeah. So the question then becomes, in terms of all alternative investing
Yes.
versus the stock market, right?
Yes.
What is your tolerance level as far as
Yes.
risk goes? The thing to remember, and this has happened a couple times in my life, but again, previously I was oblivious, or maybe I stuck my head in the sand. I'm not sure, but 2022,
Yes.
I lost 24% of my IRA money or 401k money. I mean, it was just gone.
Yes.
Now it has come back,
Sure.
but when you start to consider where you're at relative to retirement, if that had hit me at the wrong period of time, that would have been devastating.
Good point.
And
Good
this
point.
this is where these other things will hopefully buoy me up
Exactly.
into the whole thing. And we haven't talked about this so much in the past, but I do have some metals, precious metals, coins and things like that. Now,
Yes.
I'm not going heavy into those,
Yes.
and I'll never go, and this is personal, but I'll never
Yes.
10% in total into that kind of stuff. But again, it's another form of potential income that I can use in different economic circumstances.
Very, very good point, John. I mean, on hindsight, I wish over the last, I don't know, 15 years or so, I had been slowly collecting gold. I have a friend who has about 90 ounces, right, of golds today.
Yeah,
And at over $4,000 an ounce,
yeah,
let's just say he's sitting very pretty, right?
yeah.
And it's part of his asset base. It's not even, half of it or anything like that. It's just, he just collected it over the years and, he has it sitting. He also has some silver, right?
Well,
So,
and one of the other things that you've emphasized to me, and I've taken it to heart, is the earnings that I get. What does God want me to do with those earnings?
good.
Right? What does God want me to do with them? Because if I'm not doing what He wants me to do with my earnings, it doesn't matter. There's not going to be any stability. There's not going to be any happiness. I could have $10 and
Yes.
be in His will and be happier than I could if I had $1 million. Right? So all that stuff is super, super important. And also the other thing you taught me early on is the fact that a wise man leaves an inheritance to his children and his grandchildren.
Children. Yeah. That's in Proverbs 13:22, I believe.
So when you consider that, the things that I have, I'm now posturing these investments in a way that will make it not as much as possible, not stuck in probate or anything
Sure.
like that,
Yes.
and
Yes.
and move on. Now, my parents recently passed. My in-laws
Yes.
recently
Yes.
passed
Yes.
in the last few years. The only reason I bring that up is to say a lot of these coins that I talked about having, those were inheritance that they handed off to me, right? So, and you said gold, but I would tell you right now, silver's a better deal than gold.
Cool. Well, I think for our next discussion, John, our next personal discussion, John, let's let's put that on the agenda. John and I talk about once or twice a week, so
Yeah.
that's a very
Yeah.
frequent discussion. But John, I think you bring up a very, very good point. And one I haven't necessarily mentioned earlier, which is, I know we're talking about money, we're talking about income, we're talking about making sure you have a stable income, and talking about making sure your money is good, etc., etc. And I think I haven't mentioned the why behind it for me.
So important.
Exactly. That is so important. In fact, it's more important than the money itself. And the why is so I can live the life that God has called me to live. I can live the dream God's put in my heart. I want to be able to live that life. And for other people, that's the important thing. It's not just money for money's sake, but it's money so you can live a good life. Or you can live the dream God's put in your heart, whatever that is. It's very, very, very important. So for me, the topic of money is important, but it's important because of the why behind it, not money just for money's sake. So
Yeah.
that's
So the way you put it in, I think it was one of the first presentations that I saw of yours. You said if money wasn't an issue, what would you be doing with your life?
great,
And then you followed it up after a couple of moments of silence and said, why aren't you doing that now?
great, great, great. Exactly. So people should really be focusing on living the life they believe they were called to live. And I think, unfortunately for many people, the issue of income stability, income security is so huge and so unresolved.
Mm,
They never get to live the life they believe they're called to live, and it's such a big issue, And many people think, well, I'll wait till I retire, but then that retirement age keeps moving out, and then you never know what happens as you get older in life. I mean, both you and I have been in situations where I've lost one parent. You unfortunately have lost both. So you can kind of see, as you get older, things happen and things like that. So it's so important that you fix income so you can live again the life that you're supposed to live, because again, we're not going to be around forever. So we want to make the most of our time, right? I think
yeah.
it's Psalm 90:12 that says, teach us to number days aright, that we may gain a heart of wisdom.
Yeah. Nothing more important than that. I mean, all the money in the world, and you don't have to look very far
Yes,
to see people with tons and tons of money who are just miserable.
exactly.
It's
Exactly.
not money that makes the difference. It's the other things. It's not stocks.
Yes,
No, there's things far more important that drive much more tangible impact to ours and other people's lives, especially the older we get.
fantastic. So, John, as we started wrapping this up, I can't believe how much time has flown by as we've just talked through this year. So, as we wrap this up, what would you say to someone maybe who is where you were maybe several years ago, where you had just no idea in terms of the potential investments that were out there and what they can do in terms of helping you get a steady income? What would you say to them because they have no idea, they don't know where to start? What would be your advice?
So recognize the fact that alternative investments have a way to provide some balance in different economic situations, right? Experiment on the low end. In other words, you don't have to go into this with a large amount of money. You don't have to be an accredited investor in order to get into alternative type investments. There are plenty of them out there that you don't need to be accredited for. Learning about those, this is a plug for Wanji here all of a sudden, but get a hold of Wanji or somebody like him
Thank you,
who has,
John.
yeah, who has the backdrop to be able to say here. He's shared several different decks of material with me that talk about lots of different methodologies for alternative investing, and start small. It's okay, but start and move into it a little bit at a time. Heck, I just said I don't put any more than 2% of my net worth into any one thing.
Exactly.
That is not a large amount in any sense, especially in my life.
Point,
But
John.
it's all I'm going to do for now because I'm trying to make sure I spread the purpose of is cash flow and some stability and something that I can give off as an inheritance to my children.
Fantastic, John. Thank you. That's very, very good. That's very, very good. I mean, again, I think telling people, hey, you've got to start, right? And you've got to learn, right? You've got to learn. Again, one of the reasons why I've put this podcast together is to teach people. And as I build out the website, we will have courses there where people could go learn. It's very important that people learn. As I put in one of my slides, it's amazing if you look at the course of people's lives. They spend, I don't know, many, many years, maybe 15, 20 years in formal education, right? At least 15 years or so in
Yeah.
formal education, going to school, getting a degree, spending tens of thousands of dollars getting a degree. And what that degree does, it gets you basically prepared to to go work, likely be an employee somewhere, which is not bad. That's great.
Yeah.
But in comparison, how much time and effort should you put in learning to then take the money you get from that employment to grow by itself, to grow automatically, so you can get an income, so you can go on and live the life again you were called to live. So it's very, very, very important that people learn. For me, it's I'm a huge advocate of learning. Um, and then living, right? You need to learn and then you go live, and not don't learn only formally in school. Learn about the things like this topic that are important to you and are important to the dream that's on your heart. Okay. So, John, I have to say a big, big thank you to you. Thanks for being willing to come on the podcast.
It was your
Um,
risk, not mine.
and listen to me ramble on and on again. It's definitely a pleasure. And I look forward to catching up with you again next week.
Yeah,
Thanks,
absolutely.
John.